Oil prices surged in June on news of rising tensions in Iraq, but they've collapsed this month in spite of a steady stream of worrying headlines about the region. So what gives? Paul Dietrich and Stephen Shork are still with me. All right. Stephen Shork and I are going to get up and look at a couple charts. He's going to try to make sense of what's going on here because the energy markets, Paul, have gotten very confusing of late. Case in point today, here we've got these rising geopolitical tensions. You've got a lot of bullish factors getting thrown at this energy market. Here, oil is heading back below $100 a barrel.
Basically, people have looked at the situation in the Middle East. Israel, Palestine, there's no oil, so that doesn't affect the oil markets. You look at where the oil is produced in Kurdistan, that's out of the fighting.
But Palestine's getting oil from Iran now.
but that's not really on the world market, so it's not affecting us. And you look at the oil exports from the south of Iraq, they're going on just like, I think most people have said that it's just not going to impact oil.
All right, well, Stephen Shork, get up with me.
Absolutely.
Come on. I need you to show me what's going on here. You go on that side, I'm going to go on this side.
Yeah,
this
okay.
is let's start with the natural gas chart, though, first, because we've been talking about this natural gas situation and the polar vortex,
yes.
all right? So you promised to explain this more. Guys, can we get the natural gas chart up here? All right, so bottom line, polar vortex,
yes.
the first polar vortex had a very big impact on the natural gas market, and you're saying that gap is sort of closing. Make sense of this for us.
Well, absolutely. Here we have the August contract at around $3.60 right before the winter.
This is a one-year chart.
So we had the nice rally up through the winter, and then the polar vortex hits in the beginning of January, and the market gaps open. That means that we went home on a Friday, the market had a high print. We came in on Monday, the market's low print was higher than the previous high print, meaning that anyone who sold on Friday was automatically losing money, creating this scenario for a potential rally, a short covering
All right, then
rally.
we get this spike. What happens?
And so now we're looking at a natural gas market that is trading in a range bound. We've had 3 attempts to break $4.90. We failed on all 3 times.
Okay.
We broke $4.30. We failed to break support there. We failed to break support here.
Okay.
And here we are at the start of July, the hottest month of the year. Natural gas, a key commodity to run your air conditioning, and now we crashed. We closed this gap.
So what does this tell us what's going to happen with polar vortex 2?
With polar vortex 2, again, remembering that natural gas is such a weather sensitive, and what we're going to see over the next 2-3 weeks are major injections, rebuilds, getting ready for next winter.
Right.
So we're looking at inventory builds that will be probably around 100 BCF as opposed to the normal 70 BCF.
All right, flip to the oil situation and explain to us why the heck we're not getting a run-up in oil prices amidst this global turmoil.
Markets trade in steps, so you have to look at a chart as a form of a staircase. So here we are at the beginning of the year, and we start to move up our staircase, and each time we break resistance, we move a little bit higher. So now, at this point, here we are with Iraq right at the end. Now, it is key. Good news, bad action. We've had a very
good news, bad action, meaning oil goes down.
We had a very nice, good reaction, very nice bull run at this point. But now we received news, good news if you were long, that should have perpetuated the trend. But the trend stalled. That is always a key signal that we are at a market inflection point, and in this case, we were at a market reversal. So as we move down...
Does oil continue to go lower from here?
Absolutely. If we look down at the next chart, we can see that we've had these essentially... these key technical traders, Fibonacci numbers from a trading standpoint are very key. After you have a nice long run, you look for support. So here we had the low prior to Iraq. There's our Iraq spike. There's our Iraq peak.
So we're going lower in a long-term trend up.
Well, again, yes. Well, yes, in a long term, but keep in mind that the steps. So now we had the nice bullish staircase. So now we're going to look at these next steps. So this Fibonacci prior to Iraq was our first step on the down staircase. So we move down to the next chart at this point, and it will also be steps. So what we're seeing now, Sandra, is the market continuing to look for steps, and we draw it from the bottom to the high. So now this was our next step. This step failed, and now we go down to our third step.
Which is what?
The market is ratcheting down.
Give me a price for the next step.
Right now, it's essentially it's the $100 barrier, which I do think we absolutely break. 3 weeks ago, Wall Street speculators were holding their longest, most bullish position ever. That's a lot of length that has to be exercised out of the market. The bears are going to make them pay. We head back down into the high 90s now.
Paul, what is your takeaway from all this?
I think Stephen's right, and I think that, again, then could be the catalyst when that happens of seeing the whole market going down.
The whole market going up, the energy market?
No, the stock market going down because all of these traders are going to have to unwind their position.
And also, there's also a fundamental point with regard to Iraq. Why isn't Iraq driving the market higher? Well, we're looking first and foremost, we haven't seen any sort of disruption.
Right.
Even if we do, we have the Strategic Petroleum Reserve to fall back on. We now have Libyan production coming back on. We now have U.S. production at near record highs. That's on the supply side. On the demand side, oil demand has peaked for this summer.
Not to mention domestically, we're at 23-year highs in this country as far as oil production. All right, Paul Stevens, stick around.